Hello, everyone. Jesse Webb, Traders Pro. Market conditions continuing this bullish trend, bullish in a bull market. We're seeing momentum moving back into this buy zone. Also seeing a breadth hovering around that the edge of that trending location, and sentiment still sitting extreme right here. Haven't changed much really over the last couple of days. Buy-sell ratio is still sitting about the same, 1.26. Yesterday was 1.23. The day before, 1.09. So just slightly hovering above 1. And again, you can see on this line, anytime green is above red, that means you have a +1, which is a more bullish condition. If you have a buy-sell ratio of less than 1, then you're going to have red above green. So anytime you can see that number down there, 0.46, 0.34, and red is above green. When we have really strong participation and a lot of breadth happening here, you'll start to see that buy-sell ratio this direction and really widen out. It's been interesting right here. This was a bulk of that massive uptrend, and this has been kind of the topping pattern right here. So it's not real surprising that we see this, because this is just a tired looking market. It's had a really strong uptrend, but it's still chugging along. Nothing too extreme, nothing too bearish, nothing too bullish. And so we've got to continue to trust that overall bullish direction, knowing that we are extreme in that bullish direction right now. Sentiment is also sitting back here. We dip back down to about that 60 range, back to 75. Not, when we get back up to 84, 85, 86, that typically is also in reversal area. We can see divergence, as I've mentioned before, though, when we have a lower high on the indicator, but the S&P 500 is actually making new highs. That's some divergence. So another breadth or another momentum type indicator to be aware of. If we take a look at S&P 500, continue to see that. Saw just a light day the last 2 days pulling back. We've got support areas at 502, at about 494, and another one right here around that 486. So 3 real solid support areas. For pivot locations, we could be watching those for any kind of support. If it dips back down that 490, if it dips back down that 480 range. So really anywhere inside of this upper momentum zone is subject to volatility, obviously, but still trending, still not overall uptrend, as long as we maintain this range right here. That's S&P 500. We did see a little bit of a pop here in bonds a couple of days ago. It's kind of holding that move. Yesterday, a small bottoming tail bar right there. We'll keep an eye on that this week and see if bonds continue to move higher, interest rates are moving lower, and that's ultimately what we want to continue to see right here. Commodities, we're seeing oil still trying to get that trend going. Here was up 1.5% yesterday. Retracement, pullback inside of this zone. Typically, when you see a stock or an ETF stuck inside of a zone, that's what we want to see. It's that stair-stepping tug of war. It's that supply-demand process, as it is testing this now for demand to see if there's buyers that are going to step in, which they did, and starting to rally back up this other direction now. Now we'll see if we can test this 73 range and get a breakout above that on USO. Not that I want that. I wouldn't mind it to continue to slide, but we'll continue to track that. Let's take a look at gold and see if it is holding its support area. Continue to hold that support at 187 on GLD, which is the ETF for gold bullion itself. So the actual hard asset, if you don't want to go buy gold bullion, you can buy GLD, the ETF. It's going to track gold prices, and so we are seeing some continued support right here. Let me just switch out of that. Sometimes that yellow is a little bit hard to see, and you can see, this bottoming process. If we can hold some support right here, that's actually a nice support range for GLD. 3-part counter trend, a really strong support area where it bottomed right here. And now if it can continue to hold that bottom, that's the first step in a new uptrend. So keep an eye on GLD. Gold is kind of a longer term asset, but it can certainly be a trending asset as well. And right now, as it's kind of topping out, or at least testing these upper ranges, getting some volatility here in GLD. Let's take a look at some muscle stocks for today. Continuing to see, if you take a look right here, this WULF, MARA, IREN, RIOT, all blockchain miners. Okay, so we're seeing Bitcoin moving aggressively yesterday and today. We're seeing miners still just starting to light up. This actually really looks like a really bullish pattern. And Bitcoin is now at 55, pushing 60,000. The all-time highs have been, 80,000. And this stock, I don't know if we can go back quite that far just on this 2-year chart, but MARA had been, over $100 a share. So, and that was when Bitcoin wasn't much higher than it is now. So there is possibility for these Bitcoin miners to just really explode and take off. And they're all, you're seeing it across the board on these names. So if you see some of those names, this is not an oil stock. Sometimes that falls into alternate energy. But that's not these. They're just still trying to kind of classify what these stocks actually are. So keep an eye on those. That is an interesting, exciting trend where we're seeing Bitcoin really rally. It could, Bitcoin could potentially move to all-time highs. All of these companies are mining Bitcoin miners, which means they profit as they are creating each blockchain in Bitcoin has computational power to it. So every time those computations are completed, these companies are profiting from that. So as Bitcoin rises in price, just like an oil stock or a gold stock, these are mining stocks of Bitcoin, which is a pretty fascinating process. But keep an eye on some of those for this week. We're continuing to see healthcare and biotech continue to do well. Watch for that new buy list each day. That's going to give you a pretty good idea of what's moving currently. That'll do it for today's update. Everyone have a fantastic day today.